Good morning, everyone, and welcome to the European crossover webinar. And we've seen volatility finally start to go and pick up in light of what's going on with the China trade talks and whether or not they're going to come up with something. We shall find out. I wouldn't think so, but stranger things have happened. There's certainly not much time for them to reach something unless they try and extend it or just say they do what they can. I really don't know, but we shall find out what transpires throughout the course of the day. We're seeing the cable right now somewhat a little bit under pressure. You're still holding on to a decent part of its gains from yesterday. We did go on and pare back, but still holding on. And of course, we did see the peso going and break out of this area yesterday as we went into risk aversion. Dalian also just barely hanging on. We got blipped above 110, but have slid back a bit here. So what we'll do is we'll go in and take a look where we stand here now on the news. And we covered the wider ranges yesterday, and we'll probably be able to tighten the ship up a little bit today. So I think we'll probably be able to get to the analysis rather quickly. So let's go on and get into the news. For the morning bid, the escalating trade war between the United States and China will overshadow all of the news coming out of Europe's economy today after Donald Trump increased tariffs on $200 billion worth of Chinese goods this morning, prompting threats of retaliation from Beijing. France's finance minister has warned the dispute represents the single biggest risk to the world economy, and it's hard not to agree that this makes Brexit, Italian debt overload, and other Eurozone worries look like very local matters. With somewhat ironic timing, the German trade data due out today showed that exports rose unexpectedly in March, while gross domestic product figures later are set to show Britain's economy sped up in the first quarter of 2019, helped by stockpiling by companies protecting themselves against the risk of the hard Brexit. That spurt of activity will subtract from the growth in the second quarter, and today's figures are also likely to show a fifth consecutive quarterly fall in business investment. In any case, it may not be long before Europe feels the direct heat of the trade tensions with Trump. The European Union's Agricultural Commissioner reaffirmed this morning that the EU intends to keep agriculture off the agenda in its trade talks with the U.S. Speaking in Tokyo, Phil Hogan said the existing free trade agreement between the EU and Japan was the benchmark and ceiling for the EU negotiations with the United States for a trade pact. Washington has insisted farm goods be part of the talks, and officials there said there won't be a trade deal without their inclusion. On to the markets. He's done it. Trump has raised tariffs with $200 billion worth of Chinese goods from 10 to 25%, and China has pledged to retaliate. The Chinese delegation hasn't walked away, and talks are to continue, which is being taken as a good sign. A nearly 3% bounce in Chinese shares towards the close is generally lifting sentiment. World shares are flat on the day, holding just above yesterday's 5-week lows. European shares are opening as much as 1% higher. U.S. stock futures signaled a modestly weaker open on Wall Street, recovering from the earlier 0.5% fall. However, the global equities are down 3% on the week for the worst week since December of 2018 sell-off. Chinese shares have lost 5%, and a pan-European equity index is headed for its worst week since last October. Markets are on the high alert for other problems. Two, the threat of tariffs on another $325 billion worth of goods. The U.S. decision next week on EU cars. North Korea firing off missiles, and finally, Trump comments on not ruling out military confrontation with Iran. Unsurprisingly, the safe haven yields are proving popular. The 10-year Treasury yield slipped below 2.45%, near the lowest level since late March, but more crucially, it stands less than 3 basis points above the 3-month bill yield. It briefly inverted overnight, and a substantial inversion would be a recession signal. Moody's has said that a full trade war could push the U.S. economy into recession in 2020. German yields are near 6-week lows. Safety-seeking investors are also buying yen, which remains near 3-month highs above the 109 per dollar. The yuan has managed to rise above the 4-month lows from the previous day. Some clues on whether trade is already affecting growth could come out today, but German trade numbers showed an unexpected rise in exports. Britain's first quarter GDP, manufacturing, and industrial production numbers are also due. Brexit preparations could prop up the numbers, but data on business investment is likely to be dismal, reflecting the Brexit limbo. In any case, economic data have almost ceased to matter for the pound, which is in the thrall of Brexit. But there's finally a US CPI where costly oil may have boosted the headline inflation. And those reports out today, as we're mentioning, as we move on, UK GDP, US April CPI, and Canadian employment. Oh, that'd be a big mover for the Canadian dollar. And the euro hedged higher on Friday. The euro edged higher on Friday as it's poised for a second consecutive week of gains. Growing fears that any escalation in the trade conflict between the U.S. and China would force U.S. policymakers to cut interest rates. That's kind of like what they've been leaning on. President Trump's tariff increase to 25% from 10% on Chinese $200 billion worth of Chinese goods kicked in on Friday, and Beijing said it would strike back. The two sides are pursuing last-ditch talks to salvage a trade deal, while U.S. and Chinese officials return to the negotiating table later on Friday. Investors have quietly ratcheted up the bets on U.S. interest rate cut, with markets now roughly expecting one rate hike by the end of 2019. And Athanasios Vamavikidis, FX strategy at Bank of America Merrill Lynch, said if China retaliated, then the threat of a global trade war will affect the outlook of the U.S. economy and increase the chances of a Fed rate cut. In this case, the Fed has more room to ease than any other central bank, suggesting eventually a weaker dollar against both the euro and the yen, he said. The single currency edged 1/10 higher to 12.20 on Friday and was on track for its second consecutive week of gains. Broad risk appetite was muted due to the higher yielding currencies such as the Australian dollar, which is heavily sold earlier this week when Trump unexpectedly ratcheted up trade tensions. The dollar index, measuring against a basket of currencies, was slightly firmer at 97.43. Still, trade tensions have had broadly little impact on foreign exchange markets, with typically perceived safe haven assets such as Japanese yen only gaining 1.2% this week, while broader currency market volatility gauges were subdued, dispute a minor bounce this week. Elsewhere, the pound held around 130 after sustaining some losses this week. First quarter GDP, where expectations are up for a 0.5% expansion compared with 0.3% growth in the previous quarter. With that, we're going to move into the analysis. One of the things that we were looking at the Asian analysis after last Friday's close was a possibility for this market now to move towards 1262. And that's going to be the key number for today. We did make a move yesterday, and certainly this market is being still kept in check from 1229. But if the dollar does go and pull back, this will be the line of demarcation. So we're going to go with the 1262 here on the euro. And that close will be important. That's why we're going to stick here with the 62 up in here. Speaking of which here, going to move this up here to 1183. There's still the risk that the dollar could jump up, but once again, if the trade talks don't go, then the thought is, right or wrong, that the Fed can ultimately cut rates, and that's what end up weakening the dollar. But we're going to go right here with 1183 for support. And let's go and move into the cable. Well, this time with the cable has really been something else. I mean, for the prior 2 weeks, we were really traipsing against this 2980, and we finally broke below that. And then we said, hey, look, if we can get a weekly close below 2980, that's going to open the door for a move down here. Well, that did happen, but then the market turned around and reversed itself. And not only did it reverse itself and reclaim the 2980, then it really went gangbusters to finish the week and look like it was off to Venus, only to turn around and give it all back. And here we are floating with 2980 all over again, back to the scene of the crime. Support's just going to come in right there, 2956. We'll take a look at the 2 hour. Yeah, so just go with that. We'll go right there, 2952. And resistance, we're going to give it some room up in here if the dollar starts to falter. So that resistance will come in right there at 3086. 3086. Actually, put actually it comes in right here. $30.83. And let's go and move into the Aussie dollar. As I mentioned, this will probably go relatively quickly because we've already made the move yesterday, and we had spent an extra long show, longest show we've had ever, preparing for those moves and what we'd be looking at towards targets. Now it's just a matter of, do we see the follow through, essentially. So today's show will probably go fairly quick. So here we are. No changes right now. Remember, we were saying in case we take beyond this, So I think we had 69.45. It looked like they're going to try and make a hold there, or we put 69.40. That's good enough right there. 69.40. See if they dip below and try and come back. But once again, the key thing is going to be it's on a Friday, so it's obviously the momentum is pushing lower. If we looks like we may get a foothold below 70 cents, it really opens the door for this to push even lower. Another thing also is we get that close below 70 cents and it's on a Friday, we can end up now you're going to have people talking about, you know, breaching 69 cents, getting down to 68 and a half. So those are the things you have to call and keep in mind. But at least for now, we'll stick with this 69.40. And then let's take a look on the 2-hour chart. It's going to be our old friend 70.27 that we've had in here. Let's go with that on the 2-hour. And let's go and move into the Kiwi now. On the break lower here, we'll take this out. So initially, I'm going to be giving it a little bit of push down here. It's going to be 64.98. Well, we already have it marked there. And on the upside, it's going to be right there, which we already had, 66.15, 14. Right there. Dollar CAD is really interesting, very interesting, I should say. Even yesterday, we couldn't even breach this 3504 level, but we do have Canadian employment today. If it's weaker, we can certainly blast through that. Also, risk aversion could send us much higher through this. The key level, I think, is going to be 35.37, but 35.73. But before we get there, this 35.37 will probably cause a bit of a pause here. But really tricky because if we get this risk aversion, you'd have to think that that's going to blow right through that 35 cents. And when it blows through that 35 cents, it's going to blow like nobody's business unless we get some good Canadian employment. We'll start this for the little trigger though, 35.37. Support's going to be right there at 34.15. And let's go on and get onto the peso. Well, we're finally breaking above this trend line here, and you can see here on the daily, we've now even flipped to a buy mode here on the exponential moving averages, but we've broken this trend line and we're pushing higher. So it looks like we are certainly open to start making that push. And once again, if we hit some risk aversion, we can fly up in here to this 1957 without too much trouble. Let's go on and see where we stand here on the 2-hour chart. We're already starting to get a little bit of volatility here, not a whole lot, but I'm saying if we were ready to stab back up here to this 1928 before paring back right now, support's going to come in right there from just a technical standpoint. 1913, we'll call it actually 1912.9. Just a plain on 1913. Resistance, if we get this bump up in here, this will be the first pause here, and that's going to take us right there to 1943. And let's go on into the dollar yen. Well, this is all about the pivot, and that's going to be our support here, is the pivot, which is going to be the 1927, 927, that is. No changes here. And then the upside, all right, looks like we got marked off here, 1050. Let's go on in. We had 1045 before, but let's go and take a look where we're standing here. $10.59 is going to be the 38%. If for some reason they make an announcement or whatever, which we would blow doors on the upside, your first pause would be right there, 10.66. 10.59 is the 38%. The thing is, if they make an announcement, I think we'd blow right through this. We'd fly. And that comes all the way up to 11.16. We'll just go with this 10.59 right now, as it's at 38%. Now let's go and move into the cash dollar index. Well, the intraday target has been that 97.68. When we go into the 2 hour, it'd be huge for that to reclaim 97.89. So until things change, we'll go with 97.68. Obviously, we had the bump up in here in case once again we look at those extremes. $97.24, they've been dilly-dallying around with that. If they break beyond that, we have to go back to 97.08 here. You're still holding up relatively well. We're going to see things are going to probably remain quiet until we get into the U.S. session. Next move is going to be here with the Kiwi versus the yen. This 7203 has been is also a big level on the daily. Here once again we had the extremes in case they push back in here, but it's going to be with this 7203 as we tighten things up into today and use that basically as a pivot. We end up triggering a move lower. We had a resistance at 72.77 and they made it all the way up in here. Actually, it looks like they stopped right at 72.78. Right there is going to be that resistance, 72.83. If we go risk on, this thing would really jump and go bananas. But we'll go 72.83. And let's take a look at the euro yen. And we're looking right now at the daily. Got a nice little hammer here on the daily. Sort of a mini hammer, but let's see where we stand here on the 2-hour chart. So support's going to be, let's move this just a little bit right there. It's going to be 22.96. And upside resistance is going to be right there at 23.81. And let's go into the euro Aussie. We hit the 61.14. Looks like it may have got there to 61.20. I think Mad had her number 61.20 or 22. We had 61.14, so all right there, good in the same region. Seems like a tall order to make it all the way up to 61 cents, unless the Aussie comes apart, which it can. So it goes 60.98. And there's the support there, what they took a stab at. Support would come in right there. We're looking for, if we do get a good break, 59.52. That's what we'll be looking, I think, to go to if we get that break lower. And let's go to Euro Kiwi. Until things change, it's going to be the 70.72 for now. Remember, that was a very key level the other night as the market started to pare back. So it's going to be 70.72. Still have that in place. We can stretch down here to 69.15. Let's just move this a little bit closer up in here, right there. 69.32. And let's go moving now to the Aussie dollar. Aussie versus yen. We still have the potential to break even further down here. If the wheels come off the caboose, we're going to make a pretty quick run down there. We've got that little area between 75.98 to 76.21. if we get a pretty good hard break, obviously if things change, we'll be looking at 77, 75. And let's go now to sterling versus the yen. If they break them, I'll be looking for a move down to 41.84. There's some good volume in here. Even where we're at 42.49, all this is good volume. You could even make the case right there. Well, that's where they found support, 42.26. You see it coming across right here. But this is all good, steady volume. If they want to push it as low as they can, it'll be 41.84. We'll go and mark that down so no one gets caught with the pants down. We had 41.86 already. We'll just mark it 2 pips lower. Upside. $43.78. Something gets announced. If a deal something gets announced, they're going to make a run up in here, and we'll be looking right there at 87.12. That's a pretty good stretch, though. But if it did, they'd rip them up there, and that's what we'd be looking to for a target. Doesn't mean they couldn't get higher, but that's what we'd be looking at, 87.12. Well, that's if it doesn't. I'm saying if things start to fall apart, because the Aussie will be falling apart. Yeah, we'll still go with this 87.12, just on these extreme moves. Oh, we already had that marked off. And on the dip back, let's look for 85.24. Oh, we already had that marked off. So there's the bias chart for today. Probably stay relatively quiet until we get into the U.S. session and see what transpires today. But that's what we're looking at, and I'll get that posted. And thanks for joining us here on the European Crossover webinar.